It was an interesting day on Wall Street. We did close lower across the board with the Nasdaq suffering the most. That tech-heavy index was down over 1%, of course, one day removed from the big Snowflake IPO. We're actually seeing some interesting rotations within the market itself where a lot of those high-flying momentum stocks are taking a little bit of a breather here and giving way to some of the areas that hadn't been producing quite as well as the momentum stocks. So we'll talk about all that, see what it means for our posture. We'll then get into our trade application example where I wanted to focus on a utility stock that has really been hammered here this year, but now is offering an attractive point for a long-term investor's perspective if you're gauging it by its dividend yield. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 17th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel. While you're over there, check out our description area where you can also sign up for our email distribution list, which will entitle you to not only receiving a notification whenever we post these daily videos, but also give you a heads up of what stocks within the S&P 500 are giving you overbought and oversold cluster signals. So that'll be at the bottom of that daily email. In fact, I was just tweeting about that a moment ago, that Amazon actually had their first oversold cluster signal here today since August 23rd of 2019, so over a year. So Amazon will be one of several companies in all likelihood that you'll see in that email with the oversold cluster signals here tonight. In addition to that, we're heavy users of Twitter. As mentioned just a moment ago, I'm on Twitter quite often, and so if you're interested in my insights in between these videos, I would encourage you to follow me. My handle is @BrandonVanZ, and we certainly appreciate those of you that click like and retweet on our Market Outlook related tweets. Lastly, we have a presence on Facebook as well. Feel free to join our group at the web address you see embedded in the logo in front of you. All right, let's jump into our charts here, and as you can see, I've got 4B pulled up here in front of us for those of you that are premium members following along at home. And it's an interesting day because we have so many differences in our charts, and that, remember, doesn't always take place. A lot of times we see some consistency and they all kind of travel in the same general direction, but we're seeing some slight differences on the chart. So I'll see if I can point most of those out here for you. First, to get a lay of the land, S&P 500 was down 0.84% today. Dow Jones was down 0.47% today. Nasdaq was the biggest loser, down 1.27% today. And the Russell 2000 was down 0.63% today. But now when we start looking at kind of the different color codings and combinations on the chart, things start to separate a little bit. When I was with you last on Tuesday, I was saying how the Dow Jones Industrial Average chart is actually the one that looks the best from a trending perspective, and I think that continues to be the case. You'll notice the Dow Jones was today's best performer. Yes, it was still down, but it was only down 0.47%, so it was down the least amount of these four indices today. But you can see that we still have this kind of darker shade of green behind today's candle, and that signifies that we have a strongly bullish posture on the Dow Jones. Remember, that occurs when the intermediate line on the market forecast technical indicator is rising between 50 and 80, like it is in this case. It's at 56 and rising, or just simply above 80. So remember, if it were above 80 and even if it were falling, it would still be considered strongly bullish. So where it stands right now, because we're above the 50th percentile and rising on the market forecast indicator, we do consider that to be strongly bullish. So you'll notice on these four charts, that's the only one that has that dark green shading. You'll notice in the chart just below it, this is the Russell 2000. We do have a green shading, but it's a light green shading, not a dark green shading. And so in this particular case right here, you will see that we've got the green line, the intermediate line, rising, but it's not quite to the 50th percentile yet. You can see here in the label it's at 46 and rising. So still considered weakly bullish, nonetheless, at least giving us some signs of life there. And you can see that we're close to the moving average in terms of where we're trading. However, look at the difference between the moving averages now. On the Dow Jones Industrial Average, it has a yellow moving average. On the Russell 2000, it has a red moving average. Remember, that signifies price is below a falling moving average. So it's kind of interesting because from the moving averages perspective, the Nasdaq and the Russell 2000 share a commonality, which is red moving averages, whereas the S&P 500 and the Dow Jones share that commonality of a yellow moving average. However, on a posture setting perspective, we actually have the S&P 500 and the Nasdaq sharing a commonality with that strongly bearish posture. That's that dark pink background color there, whereas the Dow Jones and the Russell 2000 have bullish postures. So kind of a strange day where we have so many different moving pieces here where it's hard to make heads or tails as to where this market wants to go. One thing about this Russell 2000 down below, you can see we did finish well off of the lows like we did for most of the indices, but some of you might identify this candle that we're looking at here as a quote-unquote hanging man candle. Remember, that occurs when you are at a resistance area and you have kind of a head or a body that is mostly in kind of the upper quarter of the candle, and then the bottom portion of the candle is just that thin kind of shadow right there. So some folks might say that where we're positioned right now with small caps is actually considered a little bit of a danger zone because we are bumping our head up from under that little falling moving average right there, and kind of a bearish candlestick formation as well. Now remember, still need to confirm that tomorrow, so stay tuned. But you know, with tomorrow being a Friday, sometimes markets get a little bit jittery going into the weekend. Now remember, tomorrow is options expiration. In fact, it's triple witching. So there may be a little bit more aggressive trading and a bit more volume in the system as a result of folks flattening their positions and things like that. But wanted to point that out because although we do have a weekly bullish posture on the Russell 2000, kind of reading the candlesticks and the moving average itself almost offsets that and suggests that you should probably tread fairly carefully there. Maybe this is an environment where, since you're getting both bullish and bearish indications, maybe this would be a good selling iron condors environment on something like the Russell 2000. Now over here on the left-hand side with the Nasdaq Composite, again, this was our laggard today. It was down 1.27%, so a pretty strong downward push today out of the Nasdaq Composite. You'll notice right over here that we do have a red moving average there combined with a dark pink background color. So price is now below a falling moving average. Remember, it's been a long time since we've been able to say that on the Nasdaq. In fact, let's figure that out together. I'm going to right click, go over here to maximize sell. Now remember, this is going to be your 3-month chart here, but if I change this to a 6-month chart, you can see the last time we had a red moving average and a red background color at the same time was way back here in the first week of April. Remember what the attitude around the market was back in the first week of April. At that time, people felt like we were still destined for some really aggressive sell-off action, and the opposite actually occurred and had a really nice summer. So while we had a couple of these times along the way in the Nasdaq where we had these light pink backgrounds, those were more times to be a buyer, and it was not combined with a dark red moving average. So it'll be interesting to see how this shakes out this time around, now that we do have that combo once again. And remember, over here we were just emerging out of that difficult period. This could be a situation where we're just going into it. So if I were to back this up just a bit more, let's go to a 9-month view instead of a 6-month view. And you can see that when we kind of had the first little push of the red moving average combined with the dark red background color, that would have been this candle right here, kind of this doji looking candle back on February 26th. And at that point, obviously, had you had any inclination as to what was on the horizon, it might have been a good idea to start lightening up on your bullish positions. Now, I don't anticipate that sort of a move because this was kind of a news-driven move with the coronavirus really kind of shutting down the NBA and the NCAA tournament and all that kind of stuff that was taking place there. Now that we've kind of had a feel for that and what what the coronavirus is capable of, I don't anticipate another type of a move like that, but it could still get pretty bad. It is not likely to get as bad on a percentage basis when we went down like 35% back there. But just be ever vigilant of that, because sometimes we can be lulled to sleep by the market, and now we're starting to see the evidence appear on the charts where we have a bit of turbulence here that we're going to have to deal with. And as I mentioned in the intro, I don't necessarily think that the market itself is destined for a massive meltdown, but it could be just certain segments like the momentum stocks themselves that will struggle. Anyway, be aware that the S&P 500 also has a strongly bearish posture, but it still has the yellow background. So if you were to kind of think about it from the perspective of background colors and moving averages, the one that stands out from the worst perspective is the Nasdaq Composite, because it's the only one that has a strongly bearish posture combined with a red 30-day moving average. And we don't have that on any of the others. And that is a little bit nerve-wracking, because the Nasdaq had been the leading index for much of the last several months. So I wanted to take a second here now, and now that we're on the conversation of momentum stocks, I wanted to pull up, let's see here, it'll be 3D is the chart label for those of you that are premium members. This will be our factor view. This is our factor 6 grid here. And wanted to point out that the momentum factor is really starting to stumble. Now, when I was in class a couple of days ago, momentum was still holding up in the overall ranks, but that was based off of this candle's information when we poked our head back up above that moving average and closed there on Tuesday night. The last 2 days, we've seen a big push back lower on momentum, and if that continues, it's possible that we'll see the overall rankings on the factor selector start moving that momentum factor a bit lower. And really for the last several months, it's been the leader, with the exception of 1 week. It fell down to the number 2 slot. So we're starting to see some legitimate deterioration here. Notice what happened today. We have fresh information. The momentum factor now has a red moving average. And you can see here that its background color being pink suggests that its near-term posture is bearish, and it looks like its green line is kind of flattish right there. So anyway, swing trading purposes, momentum may not be the best place to be at this moment in time. Fortunately from my class's perspective, we actually selected a bearish trade in my factor class yesterday, as opposed to going with a bullish momentum trade. So that was a very prescient decision, as those of you that are on our Telegram app probably saw this morning. We were able to lock in max gain first thing in the morning on our bearish trade, and we were in that trade for less than a day. So we always like to see that in and out very, very quickly. And again, that's for those of you that are premium and plus members of Market Scholars to attend those classes. And then if you wanted to be alerted whenever we place the trades, you would need to be a premium member in order to benefit from that. But anyway, wanted to point that out because that really caught my eye here today. Just a couple of days ago, momentum was looking okay. 2 days later, it's looking a lot worse. We now have that red moving average. It's not that we're melting down below these prior support areas yet, but it could lead to that. Remember, the assumption is that when you are dealing with a moving average, it oftentimes is either used as support or resistance. So if I were to right click and maximize that sell for just momentum here, and then let's go out to a longer time period than just 1 month. So let me go to 6 months. And I'll show you that this moving average for momentum's purposes was used as a launch pad to go higher every time it came back down and touched it. Like back here in mid-June, it touched it, bounced off. Came back down again in late June, touched it, bounced off. Came very close to touching it again right there in early August and bounced back up and away. So the assumption was when this thing kind of maxed out here. And remember, this candle right here was the day when Zoom was up 40%. It was that really abnormal day that I was actually doing this market outlook presentation, saying I'd never seen, or at least I hadn't remembered, a day like that for momentum trading. And I was talking about stocks not only like Zoom that had reported earnings, and that's why they were up 40%, but remember, that was also the day that DocuSign was up 25% on no news. There were crazy things happening there. And looking back, that was an important date for us to put a pin in, because it was immediately following that we had this huge drop-off in a lot of those work-from-home stocks. That was important because we would have assumed that it would have kind of caught its 30-day moving average at this point and bounced up and off of it, just like it did so many times previously in the prior months, but it didn't. It kept on going through it. And then when it did approach the moving average again from the underside, it used it as a resistance area right there, pushed back lower, went back up here the last couple of days, again appears to be using it as resistance, and now is pushing back down off of it. So not a great look there for the momentum category at this point. So we're going to keep our eye on that. And of course, that's the whole point of my Wednesday factor-based swing trading class, is to evaluate this type of rotation that takes place to try to determine where's our next best swing trade going to come from. The other thing that I would point out is that the dividend yield factor has been holding up much better here recently. If I were to go back to the 1 month view, some of you might be surprised to learn that the dividend yield factor now has a better performance ranking over the last month than momentum. Not a lot of people talking about that. Dividend yield is only down 0.37% over the last 1 month, whereas momentum after today's beatdown is now down 1.8%. So there might be a little bit of a transition that's kind of taking place underneath the surface there. And you can see that the dividend yield factor is the only one right now with a green moving average. In other words, price above a rising moving average. All the rest of the moving averages on the board here are either red or yellow. Let's take a quick step away from the Thinkorswim platform and pop on over here to the internet for a second. And I wanted to say thank you to those of you that clicked like for me on Twitter the last time I did this video on Tuesday. You did get up and over 100 likes. And remember, if you appreciate these videos and you like the full-length 30-minute version of it, click like on Twitter. As long as we're up and over 100, I'll plan to do that the next time I do the video. If you like the 15-minute version instead, so the abbreviated version, then don't click like. So if the likes are less than 100, then the next time I do the video, it'll just be the abbreviated version. So I'll let you guys decide where you want to take it, what direction you want to go with this video the next time I do it on Tuesday. Up and over 100, we'll do a 30-minute version. Below 100, we'll just keep it at 15 minutes. So thank you, as always, to those of you that help support David and I on Twitter. We really appreciate that. Also, heads up that I taught my question and answer session earlier today. In fact, that's where the tonight's trade application example is going to derive from. And then David taught his portfolio management class today as well. Just a quick heads up, we have been getting our files back from WebEx quite late compared to what we had been used to a few weeks ago. I'm not sure what's up with that, if they're too busy or what's going on over there at WebEx. But anyway, a lot of times, even for my morning classes, I'm not getting the files back from WebEx until late that night. So I do apologize for those of you that want to be watching those recordings a little bit earlier than normal. But as soon as we get them, we'll get them posted to our website. And of course, you always have the ability to watch the prior classes that we taught earlier in the week. Again, just coming up here to the Trading Rooms calendar on our website if you're a premium or a plus member. And tomorrow, David's got his very popular technical analysis class at 1 p.m. Eastern time. So if you want to be taught technical analysis by a true blue CMT, David will help get you all squared away there tomorrow in class. All right, back on over here now to the Thinkorswim platform. Let's take a look at our 3 green arrows method, see if there's any left without 3 red arrows. And survey says, yes, there are. You can see here that the Dow Jones and the Russell 2000 both have a mix of green and red arrows. We have a green arrow on the Dow Jones on the stochastic reading, and we have both green arrows on the Russell 2000 on both the MACD histogram and the stochastic. Whereas over here on the S&P 500 and the Nasdaq, we do have 3 red arrows in place right now. So not ideal trend trading environment for those particular indices at this moment in time. So we want to keep our eye on that situation as we're heading into maybe a little bit more of a choppy period for the market. Remember, September and October, oftentimes known as months that can produce little corrections or even crashes in the market from time to time, depending on the situation. And of course, we got an election staring us in the face here as well. That can provide maybe a little bit more turbulence. Did want to point out while I was thinking of it as well, one thing that I was kind of surprised by today was the VIX. The VIX didn't really do much. Markets were down, in the case of the Nasdaq, down over 1%. Typically, you're going to see the VIX up, let's call it, 8 to 10% on a day like that. The VIX was up pretty nicely earlier in the session. It got up and over 28. But then by the end of the day, it closed at 26.46. So kind of looked like we had this pullback on the VIX, bouncing off that moving average, and off we go again. And remember, the opposite is typically true for the market. So if the VIX is bouncing up and off of a rising moving average, we might very well be seeing the stock market bouncing down and away from their falling moving averages. So we want to keep our eye on that story. It looked like it was getting really hairy at one point during the session today, but as the markets kind of came back at the end of the day, the VIX sold off. Still finished positive, but just not nearly as important of a day for the VIX as it appeared it was going to be this morning. So keep your eye on that as well. All right, let's go ahead and now take a look over here at our 12 grid analysis. Start with our asset class 12 grid. And one thing that's been kind of in the news here the last several sessions is oil. I'm not sure if you guys have been catching that, but oil has had a heck of a run. You can see USO is what we use as our proxy for oil down below here. And the last 3 sessions have been, monstrous. So I was with you on the video on that one, and I said, you know what? It's good to see that big move, but we are still well below a falling moving average. And if we get up there, be aware that it could very well be used as a resistance area, and you might end up bouncing down back from that level. Well, in my own head, I was not anticipating that it was going to get up there just the next 2 days, and we're almost up to that downtrending moving average already. So I'm going to be very curious to see if that sputters out at that level or not. And remember, commodities, just like stocks, can be driven by news. And there's been a lot of things that have been driving oil here recently, including some of the difficult weather conditions down in the Gulf Coast, where a lot of oil production and refinery capacity and stuff gets impacted by hurricanes and other storms. So we'll keep our eye on that story. But right now, it has been a very impressive move out of oil. For those of you that want to be bearish on it, then you're getting closer to that point where you could start implementing some bearish trades on oil itself if it looks like it's going to struggle to get up and through that downward trending moving average. But you can see the background color of the chart is now light green, telling us that we have a weekly bullish posture. Gold just to the left didn't really get its mojo going the way that oil did here today. On the other hand, we kind of are just sticking right here in this holding pattern, right, that I've been talking about in these videos for so long. It just doesn't seem like gold wants to make up its mind. You want to go up, you want to go down. On the one hand, you've got a green background color telling us that we have a bullish posture, and the fact that we were able to hold that horizontal level right there is impressive as well. On the other hand, the moving average is red, and price is currently below a falling 30-day moving average, and we have a series of lower highs. So as we've got equal lows, which is good that we haven't broken it, we do have lower highs to contend with. So it would be nice to see us in the next rebound get up and above yesterday's candle. That might start that pattern of higher highs. And then, after that, we get above that one, and then maybe we're talking about new highs again. So we got work to do. And right now, it's probably best just to, kind of take a breather when it comes to gold. Watch from the sidelines until we do get a clear breakout in either the upward or the downward direction. In terms of other charts, I should point out that there was one area within the stock universe that actually did have some positive gains here today, and that was EFA. Now, EFA hadn't been all that impressive up until today, and then today it had such a remarkable turnaround that we're very close to 3-month highs on EFA. And remember, that's your developed foreign stocks. So that's your Europe and Australia, Japan, etc. Of course, Japan been in the news here recently with Warren Buffett taking a major stake in those 5 holding companies over there. So there might be some opportunities outside of our own shores. In fact, we did talk about a developed foreign stock in my question and answer session today, a rare dividend growth investment from a foreign perspective, a very well-known entity across the globe. So if you're curious about that, check out my recording on the Trading Rooms calendar if you're a premium member. But anyway, that is an area that is firming up a little bit here, and you can see that EFA has a dark green background color, so telling us that we have a strongly bullish intermediate posture, combined with the green moving average telling us that we have price above that rising moving average. So the path of least resistance continues to be to the upside, whereas we can't make that claim in the United States anymore. Price is now below a rising moving average, which is why it's yellow, but the background color of the chart is that dark pink color telling us that we have a strongly bearish posture on SPY at this moment in time. All right, let's get into our trade application example here for the day, and wanted to kind of give you a sense of where things stand with our portfolio as well. Since tomorrow is options expiration, we're going to have a few of our trades rolling off of our books. You know, people approach a day like today, and depending upon what segment of the market they're in, they might feel like they're struggling a bit, but we've actually done pretty good considering the circumstances with the trades that I've been placing in this presentation since the beginning of August. I believe that the latest, or the earliest trade, I should say, that we have in our stable of holdings here would be the Google bull put spread that I put on back on August 7th. So, you know, really that's the last month and a half. I do the video 2 times per week. These are all my trades over that time period. And at this moment in time, we've got one legitimate loser, and that's the long put trade that we had on Vornado Realty. That one's down $137. That's really the only worry I have. We do have a slight loss on Pacific Gas and Electric. We're down a whopping $4 there, so let's call it even. Otherwise, all the rest of our trades are in the green, making profits. And remember, we have a very balanced portfolio right now. With you know, the trades that we have up here in our verticals category, we have ABBV, which is a bearish trade. That was a bear call spread. And we also have AMT, which is also a bear call spread. So that's bearish. And then we have the long put vertical on CVS that's going to expire tomorrow, and we're going to take max gain in. So those were all bearish trades. Those 3 were bearish. Then Google and Tesla were both bullish, and we're making money on all of them. So whether we're bullish or bearish, we do have positive gains on all of those. We come down here to the single category. Bank of America, you know, Shift for Payments, Gilead, and Coke, those were all sold put trades. So those are all bullish to neutral trades, and we're making money on all 4 of those trades as well. Again, Vornado is our rare swing and a miss there so far, where that one has not benefited us, so losing $100 there on Vornado. And then PCG, as I mentioned before, we just placed here earlier this week, so we haven't really gotten any traction in either direction on that one. But the point that I'm trying to make is I think a lot of people are feeling like this market environment has been very difficult to make money in. We really haven't been experiencing that here in this presentation. And I think part of the reason behind it is we were willing to take bearish trades when the market was going bananas to the upside, because we knew it couldn't last. We were also willing to take a few bullish trades here and there, but we weren't overly directional in its nature. So recognize that a lot of the bullish trades I had taken were these neutral to bullish trades, these sold put trades, where we don't need a big aggressive move higher, because it felt like that day when we had that Zoom video up 40%, that was just out of hand. Something was amiss at that moment. So if I wanted to place bullish trades after that, I certainly didn't want to get overly directional with it and really aggressive with like long calls or anything like that. So instead, opted to go with the more neutral approach of selling puts, which gives you a much wider range of possibilities for you to be successful with your trade. You don't just need the stock to go up. Remember, with sold puts, you could have the stock go sideways or even drift a little bit lower and still make money off of those. So I think it's important to kind of step back and remember, if you felt like you've been slammed by the market here in the last few weeks, it's possible that you were just way too aggressive in whatever area of the market that you were approaching. And maybe some of these techniques that David and I show you in these videos can kind of help you balance out your portfolio a little bit better when we have these types of situations in the future. Anyway, you can probably see what trade that I've put on here for tonight. And remember, I've already placed the trade. I placed it in the normal market hours, and I already sent out the telegram to those of you that are premium members of Market Scholars. So that way you guys get a chance to evaluate the trade before everybody who's watching the free video does. So up here at the top, you can see the ticker symbol is NWN. And what I did here was a covered stock. So in other words, a buy right. I bought 100 shares of stock at the exact same time I sold a call. So the call that was part of that trade was the October monthly $50 call, which we sold for 50 cents, and we bought 100 shares of NWN at 50, actually it was 45.57. So net, the net effect of those two things is we paid $45.07 out of our pocket. Now, our obligation on a buy right is if NWN does go up and over the $50 strike price in October, then we might have to get rid of our holdings. Right now, we're making 22 bucks on that so far, but of course, this is just put on here today. So let me explain why I was looking at this. First of all, as I mentioned earlier in this presentation, this was actually an idea that came to me from one of my students in my class. So Claire, if you're listening, hello out there, and excellent question you had for me today in the Q&A session. I'm going to show you guys what is interesting about NWN right now. It's not a very big company. It's a small cap company. It's a utility stock in Portland. Of course, there's a lot of wildfires out there, and I think that's part of the reason that when we look at this chart here, Northwest Natural, that this stock has been absolutely hammered here lately. And it was hammered in such a fashion that it's fallen from $77 earlier this year to now, closing today, at $45.64. Now, for those of you that are familiar with this particular chart, this is the chart we use in my long-term investing classes when we evaluate dividend stocks. Each dividend stock is said to have its own zones of support and resistance based upon its own historical yield tendencies. And so this particular company tends to be an attractive long-term investment when it gets down to this blue line here, and that is at the time when the stock is yielding 4.1% or more. Now, this particular company has raised dividends for 64 years in a row. Like we were exploring with my question and answer session today, that's actually the third longest streak on the planet. So this is truly one of the longest companies that's been willing to raise dividends, 64 years in a row. Now, the downside is that they don't raise their dividends very aggressively. You can see these little moves higher in the dividend stair-step line. Those are the times when the stock is raising its dividend, and they're usually raising their dividend by, just a few pennies here and there. So that's the downside. The upshot is the long 64-year streak. The downside is that each one of those increases is pretty small, and then you kind of also have to consider that we have an above average yield here. Well, anyway, you can see that earlier this year, we were way up here at 77 bucks. We wouldn't have touched this with a 10-foot pole up here from a long-term investor's perspective, right? We knew that when it was in the orange zone, it's wildly overvalued. So we had no interest in it up there. And if you would have asked me at $77, would we get a chance by the end of the year to buy this stock when it's in the blue zone? I would have said you're dreaming. But that's why they play the game. And this stock has absolutely collapsed and has fallen all the way down here to this blue zone right now. So at this point, it is attractive, according to the average high yield theory, for long-term investors that want to buy it and then, just close their eyes. Now, another thing that I would point out here is that we've had 4 weeks in a row of oversold cluster signals. That's what those little green dots are on this chart 2A here. It's telling you that from a weekly candle perspective, or in this case a weekly bar perspective, it is considered oversold. You can see that we had an oversold cluster signal on the weekly candle over here, as well as another example back in September of 2013 when the stock was about a $40 stock at that time. And of course has gone on a tremendous run since then. So this one has a pretty good history of if you buy it when it has the little green dot next to it. In fact, let me do this. I know those little yellow labels there sometimes get in the way, so I am going to get rid of those bubbles. Yeah, I think it's that one. Yeah, there we go. So if you look at this chart, this goes back over the last 10 years on NWN. So this is Northwest Natural. Had you bought the stock right there with that little green dot, had you bought the stock right there with that green dot, had you bought the stock right there with that green dot, or right there with that green dot, you would have been feeling pretty good about yourself, because the highest you would have purchased that stock would have been $43. The lowest you would have been purchasing that stock was $40. So you had 4 different times throughout the last decade where you're buying between $40 and $43 to ultimately see that thing go up to 77. Now that we've got these green dots showing up again, do I expect it to go right back to 77? No, not necessarily. But do I view this as an attractive long-term situation for this specific utility company? Yes, I would say that. Here's one more thing to consider. This particular stock, if you go to a monthly candle chart now, not just weekly, but monthly, as of this moment in time, you have the incredibly rare monthly oversold cluster signal. You can see on this chart, there has never been a monthly oversold cluster signal on this particular stock, at least going back here to 2007 where we can track this data. So this is a really rare situation. And remember, so I was telling my students here today in class, if you go over here to SPX, this is the S&P 500, it had one and only one cluster signal here over the last 20 years on an oversold monthly perspective, and that was February of 2009. So literally the end of February 2009, it gave you a oversold cluster signal on the monthly candle. And of course, that would have been the best time to be buying the S&P 500. Now, I can't guarantee that's going to happen with NWN either. I just want to make sure you're aware of how rare it is to find a stock that is giving you an oversold monthly cluster that still has its dividend streak intact, and one of this kind of caliber with 64 years in a row of increases under its belt. So for some of you, you might just buy the stock outright and hold it for the next 10 years as a dividend investment and keep on reinvesting those with your drip, with your broker. What I opted to do here today, just to kind of mix things up a little bit, was just simply buy the stock and then immediately sell the $50 call in October against it. So if it does rise above 50 between now and October, we'll have to sell it at 50, but of course we would lock in $500 worth of gains if it came down to it. So that's not the worst outcome in the world either. So anyway, that's your trade application, a rare long-term investment for those of you that are interested in that sort of thing. So anyway, I hope you guys have a great weekend. I'll plan to be back with you on Tuesday. Remember, if you want another full-length video like this one, go ahead and click like for me on Twitter. It'll be pinned to the top of my timeline. You can also click like directly on our website below our video on the little Twitter widget when you're watching the video there as well. David should be back with you tomorrow. So I hope you all have a great weekend. Best of success with your trades and your investments. Goodbye for now.